The Bombay High Court has refused to grant an interim relief to the Lakshmi Vilas Bank shareholders' petitions challenging the scheme of amalgamation with DBS Bank India. Let's do a three-point analysis of what this really means and what's next for the beleaguered bank, that is Lakshmi Vilas Bank. 1. Bombay High Court's refusal to stay the merger. Well, a division bench of Justices Nitin Jamdar and Milind Jadhav hearing the petitions that were filed by a group of promoters of the ailing Lakshmi Vilas Bank and also Indiabulls Housing Finance Limited, as well as one of its shareholders, has refused to stay the merger of Lakshmi Vilas Bank with DBS India. Now, the court has said, and I quote, "We are refusing the interim relief sought by the petitioners to stay the amalgamation. The petitions shall be placed for hearing on December 14th when the respondents, that is Reserve Bank of India, Lakshmi Vilas Bank and DBS Bank India, shall file their affidavits in reply," unquote. Now, as per the scheme of amalgamation, the entire paid-up share capital of Lakshmi Vilas Bank will be written off, resulting in shareholders losing their investment. Now, the petitioners challenged this part of the scheme and had sought an interim stay to this amalgamation. The petitioners had argued that the Reserve Bank of India's move violated Section 45 of the Banking Regulation Act. Also, this section requires the RBI to take consideration of all stakeholders, and that is including the members as well. Now, the court, however, said that petitions pertain to a monetary claim and it needs to be heard and decided finally. 2. Decks have been cleared for the beleaguered bank's merger. But if you see, the merger with DBS Bank India will be effective from November 27, that is today. Also, the moratorium imposed on the cash-starved lender will be removed from 27 November, that's again today. The RBI had earlier imposed a 1-month moratorium on the private sector lender and had capped the deposits and withdrawals at 25,000 rupees. Now, customers, including the depositors of Lakshmi Vilas Bank Limited, will be able to operate their accounts as customers of DBS Bank India Limited, and that is with effect from 27 November 2020. Now, DBS Bank India is already making necessary arrangements to ensure that service as usual is provided to the customers of the Lakshmi Vilas Bank. Now, all employees of the Lakshmi Vilas Bank shall continue in service and be deemed to have been appointed at the same remuneration and on the same terms and conditions of the service as were applicable earlier as well. Now, the government has also opined that the speedy amalgamation and resolution of the stress in Lakshmi Vilas Bank is in line with the government's commitment to a clean banking system. Also, if you see, while the government wants to protect the interests of depositors, public, as well as the financial system as well. 3. What do experts really say on this whole scenario? Well, the investors who really bought Lakshmi Vilas Bank shares in hope of revival on the expectation of healthy gains have really got stuck, with trading in shares suspended and shares delisted now. In this merger, shareholders of Lakshmi Vilas Bank will not get any benefit. Also, if you see, the entire capital of the bank will also be written off post the merger with the DBS Bank of India, or DBIL as it is called. Now, as Moneycontrol really reported this morning, as part of the scheme of amalgamation, if you see, the RBI has now also directed the Lakshmi Vilas Bank to now write off the tier 2 bonds worth about 320 crore rupees as well. Now, Jai Kishan Parmar, who's a senior equity research analyst at Angel Broking, has said that we believe a merger would be beneficial for DBS Bank as it would be applicable to grow the business in the south that has business and individual route to Singapore as well. Now, as of Q1 FY21, DBS CRAR actually stands at 15.99% and the gross NPA and the net NPA at 2.7% and 0.5% respectively. Now, DBS is also ready to push in fresh capital to initiate the new process as well going forward from here.